The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento. It's of course a great pleasure to be able to do this, and big shoes to fill, but we'll do our best. And let's just go straight into the market. We're looking at the S&P E-minis up 22 at 1988. This is still the September contract, and you can see that it's made a leg B in the Chapman wave methodology. We'll talk about that in a moment. And the weekly chart had a spectacular run from that low of 1831 to today's high right now in the 1987 area. That's 160 points. That is big. And most importantly, if you're looking at my 120-minute chart, you will see that, in fact, there are two, Larry uses the Gartley and he uses the butterfly methodology. And if you look at this, you can make a case that there has been two patterns here. Let me just draw this in for you. I don't want to make it messy. Think of it this way. Here's your first triangle. Here's your second triangle. And we've come back to the starting point. 1990.50 was the high that was made. Well, actually, 1992.75 was the real high that was made at 8 o'clock on the 27th of August. The S&P E-mini fell to 19.50, had a very strong bounce. I'll talk about this. The letters that you see, if you're not used to my notation, went to a peak. The first peak was peak D at 1992.75, plunges down to a trough F, goes to, that's six troughs to the downside, goes 5 peaks to the upside to E, 1973, and then comes back down again, almost in a left side, right side price time match. And what is really important, it made a higher low. Instead of 19.50, it went to wait a minute, that's not correct. That should have been 1898.75. I just didn't see that. 1898, big difference. Let me just call that 1898 for the moment, 1898. So it comes back and it makes a higher low bar. So now what you've got is the one triangle there. Then you've got your leg down to 1910 from the 1973 level. And now you've got a triangle that's gone back up to the 1992 area, exactly, actually around number 1992 high today, so that you've completed in the Chapman wave methodology from this peak here at 1990.50 made at 5:15 on the 28th, and using the high bar of 1973.50 that was at noon on the 3rd of September, you've got a left side, right side price time match that went exactly to the bar right here, as well as a Chapman wave inside wedge target line. And that suggests that the bulk of this move right now has been made. That's really what I wanted to say. And in the context of the Chapman wave methodology, let me just pull this back a little bit. This is a 120-minute chart. You can see that the pattern that I had drawn in a while back of what I call the lowercase h that goes to a lowercase m that can become a larger arch formation, especially if the left side low is not broken, which it hasn't been, suggests that this area that we're in right now, if I was to put it into the context of my daily chart, this is the daily chart of the Dow, the arch that has gone to the M formation when today opens, and it goes above 16,590 for leg B to the upside. That suggests very strongly that the resistance lines, a number of them coming in right in this area of 16,700 is going to be formidable resistance, and that in the 120-minute chart, now I'm going to go to the 120-minute chart of the Dow. Let me just move this away. Okay, here it is. I wonder if I've actually notated it. Haven't finished. Peak C1, C2 pulls back, goes A, B, and then this is the pop that should happen. We've got almost the same thing that's going on as the E-minis, except the E-minis, of course, trades almost 24 hours a day. And this particular pattern that we're looking at now, I'm going to make it a little bit clearer, shows that there's a second arch being formed, and that arch is very important. Why? Because if I'm correct that this is no more than a bounce within the context of a bear phase, then we should be stopping here, in that even if there's a strong close today, maybe there'll be a Thursday doji narrower, much narrower candle tomorrow and a pullback on Friday. That's number one. That's the scenario. The other scenario is in the pattern that I often talk about, in the V-shaped pattern. We've extended too much to the right. That's the reason why the arch formation is the one that fits the context best of all. However, I need to do a couple of things, and I'm going to run the numbers right now. It's 9 o'clock. The market's not open. I'm not used to this. Usually my show is the Tiger Technicians Hour at 11 o'clock. Oh, let me mention something right now, because I'm liable to forget it. When I get involved with charts, this is my total focus. So let me do some of the more esoteric things. Let me mention that I have a webinar. If ever there was an opportunity, two opportunities actually, to talk about volatility, isn't this the most appropriate time? So I have a webinar tomorrow night. Wow, it's tomorrow night already. That time really flies. The historical context of volatile markets is a live event at 6 o'clock. It's really open to all my subscribers. Now, you can come and join by, you can get a 30-day free trial to my newsletter called The Opening Call. And all you have to do is sign up, and you'll be able to take my webinar. You can be able to review the webinar. You're probably able to get other things that I've done as well that are archived. Most importantly, you'll also get the newsletter. You'll be able to follow my Chapman way. You'll be able to follow the techniques that I use within the context of the umbrella of the term Chapman wave. And here's the other thing. The real kicker is that we've got an end of summer tiger. Who knew? An end of summer tiger dollar sale. This is amazing. Get up to 40% bonus on whatever you spend on tiger dollars this week, only for our end of summer tiger dollar sale. I think it ends on Sunday. This is amazing. Great timing. And so this is just beautiful. Why? Because you can purchase those dollars at a discount, and you can use them anytime you want. And for any of the services. It's fabulous. Great. Thank you, TFNN, for doing that. Okay, let's get back to our story. So this is the context that I'm going to be putting it into. I want to move this away, and I'm going to run these numbers. Here's the arch formation in the second one, and it says that the Dow could rally to the 16,690s. If it gets to 16,700 and closes in that area, then there is a chance. Why? Because the MACD histogram, this is that 0% line. It's really a series of moving averages. And when these moving averages, when this 9-period differential, the green faster moving average, crosses this red line either up or down, immediately the 0% line kicks in. And if it goes positive, it tells you how much is positive by. Number one. Number two is I use it only in context of a confirmation. I don't use it for trading at all. I use it only as confirmation of what I'm thinking. And in this particular instance, it says that because the slow stochastic is only at 41% after this very big move to the upside and then a sideways consolidation, my suspicion is that in the larger context, we could be looking at a bigger M formation, maybe getting to the 16,900s. It's possible. I'm not sure yet whether it's going to be doable just at this particular time. We'll have to see how the Dow closes, because I have other indicators flashing that says there should be some kind of intraday pullback, not quite like Thursday, but there should be some. So we'll see what goes on by the close today. But the MACD in the weekly chart, now Larry doesn't use the moving averages per se, but in fact, the patterns that he looks at, and it was interesting. I was with someone yesterday who I'd given him as a gift Larry's book, Trade What You See, Patterns. The exact title is, it's up here in my bookshelf. Oops, I just can't see it at this particular moment. But basically, he's Trade What You See is Larry's theme. That's his. That's his show. Trade What You See. And and this person is an expert in Elliott wave. I would say he's one of the experts in Elliott wave. And he said, between the Chapman wave and the Elliott wave, he says, they're terrific. But when I started reading Larry's book, it's so thorough that there were so many things that just gelled with me. So I highly recommend the book. Larry's work is very detailed. It's very clear. And it's very precise. So when we're looking at these patterns here, what I'm thinking is this, that we have, I call them the arch formations. You could make a case that you're forming some kind of a Gartley, but in the meantime, back at the ranch, the aspect that I use my Dow quartet. It is GE. GE has had a fabulous move off the I don't know who bought it at 19.37. They've had a spectacular 20% gain, over 20%. What am I talking about? Almost a 30% gain in just 2 weeks. And what's happened and even more importantly, what's happened is that I use GE as a short-term indicator, and it's acting really well. In fact, the pre-market is up at 25.12, which says that it is testing the 25.17 high of the 28th. And if it breaks above that, I've got to consider that this is an arch formation that's gone to an air method. The second arch could be bigger. And that's going to impact the weekly chart. If you look at IBM, number 2 in my list, IBM, lousy chart, but it is bouncing. If you put in triple M, that was 2 M's, it should be 3 M's. What happened here with MM? I always do that by mistake. Millennial Media, they must have been taken over or something. Look at that, big move from 1.30 something to 173. I want 3 M's. 3M, also a horrible chart in both the weekly and the monthly. The daily chart is giving that bounce. UTX, which I use as a more intermediate term indicator, which is looking terrible. Now, these stocks, this quartet, has the potential to move, and it could move, in fact, I would say it could move, say, 7%, which would help the market, general market. That's would help the Dow. But if the cyclicals start to move like that, then you're bound to see the general market moving high. So the fact that they stuck here is really important. The fact that they are oversold becomes very important in this particular reflex rally to the upside. Okay, now let me do some other things. When you're looking at the S&P SPX.X, I didn't finish what I was looking at before. This webinar that I'm doing tomorrow on volatility at 6 p.m. Eastern Time, and it's archived. If you aren't able to make it, you'll be able to listen to it as an archive. That is going to talk about volatility. Now, the last few days, let's say the last 2 weeks, we've seen incredible 3 weeks. We've seen incredible volatility. But in the context of what we're looking at in the monthly chart, it's really no big deal. So volatility is the perspective that you can give it, and it's very often based on the shorter term, even though we like to think of it as a more intermediate term.
The TFNN End of Summer Tiger Dollar Sale is here. We've just announced our best Tiger Dollar sale is back for 5 days only. This week, you can get up to a 40% bonus on whatever you spend when you purchase Tiger Dollars. Tiger Dollars are the best way to lock in added value and extra savings for any of your TFNN products or services. Normally, we only offer a 10, 15, or 20% bonus, but for this week only, we've doubled all our bonuses and are giving away 20, 30, and even 40% bonuses on all Tiger Dollar purchases. Tiger Dollars can be used for any TFNN product or service and never expire. So whether you're a subscriber already or planning on trying out a product soon, now is a perfect time to get your Tiger Dollars. For more information and to purchase your Tiger Dollars today, visit the front page of TFNN.com for all the details. Remember, this sale ends Sunday, so act now and don't miss out. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and Basil Chapman sitting in for Larry Pesavento, and let's just look at this S&P. The S&P closed at 1969.41. The E-minis are up at 1986. This is September, up 20. And the pattern we're looking at here, once again, is the arch formation. Leg B will start above 1993.48 in the cash indice. But most importantly, if you're looking at the weekly chart, which is in a sell mode, I haven't got a change in that yet, it suggests that, yes, you could get another arch formation. I've drawn it in there. Let me just make it a little clearer. Draw it in here, over there. And that says, you know what, a best case scenario is that we go above this very important candle of the 28th week of the 28th of August, 1993.48. That's another 300 points in the Dow, another 30 points in the S&P. God, I just don't know yet if we can do that. The MACD is not very good. It's been dropping sharply. Now, there is something that I'd spoken about. I had a caller on my show last week, and we were looking at the spine. He suggested that in his work that there should be a very sharp drop. He was correct in the sharp drop, but my contention was that there could be a sharp drop, but it's within the context of a rising pattern that should make at minimum an H that goes to an M formation, but that there was a volume, price volume spike low. This is a technique that I've developed that says in certain cases, if there is a whopping volume spike on an emotional slide to the downside. I'll be talking a lot more about it tomorrow night. You can, in fact, get a rally, not in price, but in time. We saw that in the XAU either earlier this year or last year, I can't remember. The same thing. And the XAU then rallied for weeks before it came back and retested and then broke the low. This is the same thing here, that because of the intense selling, the VIX index went to VIX, and I'll talk about this tomorrow, go in great detail, all the way to 53.29. That is huge. I would have thought that if it went to 53.29, if I just looked at that, I would have said, wow, the market must have made a climactic low, and we should be a V-shaped pattern, we should be way higher. The fact that we've stalled in this H pattern, both in the Dow and the NYA, I'll look at the New York Stock Exchange in a moment. I know Larry loves to look at that. So, and the S&P and the Dow have done that. My contention is that that's what I call an internal low, and that we still have to wait for the residual low to hold. I'll be talking about that in detail tomorrow and maybe a little bit more on my show. Let's get back to the nitty-gritties. If you're looking at the NYA, the New York Stock Exchange, very broad, it's got 2,000 issues there. You will see that that pattern, where it went sharply under the 200-period moving average in the weekly chart of 98.15, it went down to 95.09 the week of the 24th of August. The rebound that we've seen, this little sandwich effect here, big green, look, big red. Bam, it goes down the week of the 24th. Then the following week, last week, it makes an inside bar, more with the body of the candle than the actual wick. And now we're having an even smaller. Think of an oscillation. Think of when you take a knife and you put it on the edge of the table and you take the hand and you go, ding, and you make an oscillation. And then all of a sudden the oscillation starts to die down and then it just completely fades away. You can get that here, right here. We're getting this oscillation. So it feels really big, these big moves from 95.09 in the New York Stock Exchange all the way up to the 10,250 area, and then back down to 98. But this is really small potatoes. This is nothing. That's volatility. That candle is what I call the Chapman wave Roman candle. I'll talk about it tomorrow night. The implication of a Chapman wave Roman candle at a top is something that you do not want to ignore. Why? Because if you look at that Roman candle there, the Roman candle of November of 2007, when the New York Stock Exchange took that low out, it started a big move to the downside. A second Roman candle took it out, took a long time to take it out, took 1, 2, 3, 4, 5, 6 months before it pierced it, and then bam, we went all the way down to 41.81 from the 10,387 level. Will we do the same now? I'm just not sure it has the same connotation, but you can see this up channel trend line is really important. And that trend line was tested, but not broken. And if this trend line, I'll tell you about the trend line this month, the month of September, at 78.80, 97.80, that is. Not good enough for me. I would say that I want not the trend line, but I want the low, a close below the low of last month of 95.09. A close in the New York Stock Exchange below 9,500 anytime in the next month or two is going to be very, very important. Why? Because it will say that the MACD and stochastic are going to go much, much lower, dragging the price. I'll be back. Basil Chapman sitting in for Larry Pesavento. Market will have opened and we'll be on our way.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We are back. Basil Chapman sitting for Larry Pezzavento. I will be back for my show at 11. Don't forget, let me just do this one more time because I think it's very important. Let me go right there. Front page of TFNN, Tiger dollar sale this week only, up to 40% bonus, number one. Number two is the opening call. That's my daily service. The historical context of volatile markets, a live event. I'm going to be discussing the VIX, the implications, the emotions, the fractal, that it can happen in 120-minute charts, but it can happen in monthly charts, how that spiked to 58, 53 to 58 in the volatility index, what the implications are on the weekly, especially if it starts to pull back, or if it happens to hold, just a bunch of things. Now, in the Chapman wave, it's real simple. You look for the lowest, most identifiable low bar, and you start a wave count that should take you to at least 4 higher peaks. It doesn't matter the pattern in between as long as the low isn't taken out, the original low. And at D, a bunch of other things can happen. Well, what happened from right here at 10:50 on the 8th, the low of 1944 round number low went to peak A, then a B, then a C, sharp pullback. Wow, it looks just like that pattern there. And then a spiral up to D. At D, it goes sideways and then spikes one more peak up to an E. And at that E, it pulls back. It makes an A. This is an E that goes at 4 o'clock on the 8th of September. Then what happens is it pulls back, goes sideways, makes an A, which becomes an arch formation, peak A minus, and then it starts a brand new A, B, C, D, E, and it can go to an F. That's the sixth highest peak. That happens very often if you're just continually moving higher. You just keep going with that wave count alphabetically up to an F. You can go to a G. It's unusual, but you can. Next time it pulls back, look at how the black line, that black line is the 9-period exponential moving average. And then it goes peak A, B, C, D, pulls back, and has a spiral. All those are the same highs, so they don't get counted as a peak. 1987.50 at 3 this morning, at 3:10, 1987.50 at 3:10, and at 3:20, 1987.50. Then pop, it goes to a high, and that high happens to be a round number of 1992. Then you get, I drew this in earlier on, a cup formation that has one particular chart pattern. Remember, patterns in the market, you only get 3 patterns. One is the straight line up, or straight line down, or the cup formation, or the arch formation, the cup formation, or the arch formation. Within that context, there's a part A and a part B to the cup, because it could be a V-shaped pattern or a cup. Or in the upside down, it could be an arch or an inverted V. All right? And what I suggested here by the patterns is that this peak C might fail. It could go to a D, but I was suggesting that this peak C could come back because the big test is right there at 1982.25. If there is a break under 1982.25, it should pull back. The way it's holding here, you see, time is important. I'll talk about that in the volatility index. In my work, a buy signal to a buy mode is best in a bull phase when you have no more than 2 to 3 bars of rest, and then you make a new leg up. The longer you take to make those legs to the upside, the more strained it could be, and the more the chances are of a big pullback after each peak. That's number one. Number two is same thing in a bear phase, on the down phase, where you want to see speed is your friend. When it takes time, it's not your friend, it's your enemy, because it can bounce. And then you want speed on the downside again. So this is going to be a very important moment for a number of reasons. Now, I'm going to do this just for a second. I want to, now that the VIX is opened, because tomorrow's webinar is going to be about the volatility index. And believe me, if you have a portfolio that you've added to every month because it's part of your work, I would suggest to you that this is a good time to just get some information about what might be a good scenario. If I'm correct in suggesting that we're in a bear phase and these are counter trend rallies, what should be best in terms of protecting your portfolio? Maybe you don't do options, maybe you don't do futures, but maybe you could take a position. The inverse of going up is going down, and there are ETFs that are already made up to that specificity, so that you don't have to worry about shorting the market and waking up in the middle of the night and saying, oh man, it just went 7 points against me, we've got to come up with another $700 or $7,000 or whatever it is. This way, you put in your stop, you buy it long. The ETF is made up of short positions, so you don't have to do any thinking. If the market goes down, it's going to go up. If the market goes up, it's going to go down, and you can put in a stop and say, that's a protection thing. It's like insurance. I don't mind losing a little bit of insurance if I've got that insurance, because the bigger part of my portfolio is doing well. But I want to protect it. So I'll be talking about that tomorrow night. What might be at this perfect time for it? Why? Because I think that we've reached at least the testing of the upper side of the M formation. Let me just quickly go to this chart here. Yep, there it is. Leg B, we're getting right into the resistance area. Can it go higher? Of course it can go higher. The MACD just crossed positive. The histogram's good, but that stochastic it's not working its magic, and it's saying this is a little bit of a stretch. So there's a chance that, in fact, it could start to fail. Now, I had a signal yesterday in my Chapman wave trend gauge which said that the Dow should go negative this morning. I don't think so. Plus, the Dow's up 100. Let me do the numbers. Dow's up 143 at 16,635. S&P's up 15 at 1984. The let me go to this. The comp index is up 42 at 48.54. Gold is down 10. I just don't see anything with gold yet, as long as the dollar's strong. And so gold is down at 11.10. And silver's down at 14.65, down 10 cents. Platinum's down. High-grade copper's in that range. It's at 2.45. Now, that was a really good move in copper the other day. Let me just do this copper right now. Look there, the copper is leg D. That's where you've got to be a little bit careful. But this leg D is really a breakout from other patterns that we've been looking at. So you've got to treat it with a lot of respect and say maybe copper, at least in the shorter term, is showing the kind of strength. So I've got copper in leg, a peak C in the daily, in the 120-minute, I'm sorry. And it should maybe make a leg D, and then it'll start to at least digest some of these gains. So copper is acting, monthly chart still looks terrible. Weekly chart has improved quite a bit. And the daily chart, of course, has had a spectacular move from under 2.20 to 2.45. It even went higher than that intraday. It went 2.4755. So this is good action in copper. The dollar I was talking about just a moment ago. Look at the dollar. The dollar is in, it's the same sort of thing, the same pattern. It's got leg A, then it goes to peak A. It goes to peak B, slightly higher, and it needs to really take out 96.62 quite decisively. If it can do that, the next challenge will be 97.07, and a break above 97.07 says you can start looking at the weekly chart as making a double cup formation. One cup, second cup formation. And that's going to be very important. The support on the dollar is at 95.50 to 95.17 on any sudden turn down. Hey, what about bonds? Well, the TLT is just plunged. It just gapped down, and it's making the pattern I call the Eiffel Tower, straight up and then straight down. But there's a difference. In this particular move, we've got to start looking at the TLT, which is down at $1.18 and 119.69, as being in a trading range between 125 to 26 on the upside in the short to intermediate term, but 117 to 115, maybe even 114.88, the low that was made back on the week of the 26th of June. That's something that you want to look at. So as I'm seeing it right now, there's a failed cup formation. It's called the right shoulder failure pattern. And it looks like what I call the Eiffel Tower. What is the Eiffel Tower? It looks like an uppercase A. I always put it into, there you are. And let me just do this right here. And I'll show you something about this pattern. It's a very important pattern, and you're going to be seeing it lots in many charts. And the most important thing about it is that you go up with the same speed as you're coming down, or rather you're coming down at the same speed as you went going up. So you go straight up and straight down. That's a pattern right there. Then it made an arch formation that we call the lowercase h pattern, and then it breaks the low. It makes another one right there and breaks the low. Now it's made an even larger one, and that says that if bonds, now this is going to be really important. The weekly chart says 115 is really important, 200 period exponential moving average support. The MACD and stochastic are not great, but they're actually not very bad right now. So it's this uppercase A that we're looking at in the daily chart that's going to be so important. Look at this. This is the pattern we're looking at. It's really more like an arch. I like to think of it as an A, but it's more like an arch, like that. But the part that looks like an A is right here. That went from there straight down, and now it's going straight down like that. So it's very important. The key support has just been broken. That's the support right there, the little trough at 120.42. We're under it by 50 cents. Now there's no support until you get to 117.66. That's the next support. And if you do the left side, right side price time match, I always do it conservatively at first. I pick a particular candle that's very important, and I say, okay, this is the candle we're looking at right here, and it went up and then it pulled back. So now the left side, right side price time match says new parallel, make it pink, and that goes from there to there, and that comes out by in 2 days' time, Wednesday. By Friday, if we've taken out this level of support right here, that candle at 118.95, then we have no choice but to be looking at this candle right here, that low. And then I have to do the same thing. And as I say, I'm choosing a candle rather than the exact plumb line at the top. Why? Because I want to be a little bit conservative. And I want to do it with this in mind. I take the left side peak of consequence and I try to take it to the level of support. And that says by Friday, the big test will be 117.80s. Has it broken that, or is it holding above that? And normally I call this the Chapman wave inside wedge. Okay, so we make it pink dashed line. I call it the Chapman wave inside wedge, pink dashed line right there. This is the left side to the right side. The plumb line really is there, but I've chosen this little doji candle, and it works out perfectly to that high, going to support levels. So that's what I'm looking at the TLT. We'll see if it works out. Now, if this is the case, it means that there's a chance that tomorrow we do get this doji candle in the Dow and the S&P, and that Friday there's a pop and a drop. Kind of the way I'm looking at it, and that would coincide with the TLT trying to find support here as it's stuck in a trading range rather than break that trading range, and we're going to see this as a very important criteria. Let's go back to the VIX index for a moment. Remember the webinar I'm talking about? We'll be talking about these patterns, why it is so important to monitor these candles. Look at this. Look how many times in the weekly chart you've had a spiral to the upside and then a plummet to the downside. And all you do, you keep making these cup formations. Cup, cup. Look at the rhythm. Cup, then a larger one, and then an even larger one. And even a major move to the 53. That 53.29 would say to me, you've got a couple of weeks of not breaking the low of that Monday low. But this is a different period because we've suddenly got the monthly chart, which is showing weakness in monthly charts in most of the indices. All right, so let's do this. We're going to go to two things. We're going to go to the IWM, and this is really interesting. The IWM is a real fooler. It led at times and it failed at times. And when it was leading, it was these small caps that seemed to be immune to the dollar experience that many of the big caps like the Dow was being influenced by. And at the same time, it was saying that under the radar stocks were playing catch up, because when the small guys start to catch up to the big guys, that's when you got to be a little bit careful, because that's more the experimental, no, I wouldn't say experimental, that's more the volatile stocks that we're looking at. Lower cap, they can move quicker, they can move sharper in either direction. And now what we're looking at is the monthly chart. The weekly chart is absolutely in a sell mode. I don't see any sign yet of even getting a buy signal for the weekly chart to make an even larger arch formation. So we're getting really close to some kind of at least a resistance point. You've got a peak A, B, C, D, and then an A, B, E, E/B. No, E/C in the 120-minute chart. But all it is that same pattern that we're looking at, that arch formation. If in fact at 115.72 up to only 27 cents, if it can get to 116.70, then all of a sudden you can say, hey, maybe that 200-period moving average at 118.26 will be hit. I don't think so. And that monthly chart, look at these monthly charts. Here's the Chapman wave Roman candle. Near the top, there was one last month. No, there was one in, wow, I forgot about this, in July, and it broke down. There was one in August, and we're going to see. Why? Because if there's a trade in the daily, in the weekly chart, with a daily 2 out of 3 days, preferably consecutive, so out of 3 days, 2 of them, the IWM is trading under 112.50. It's going to be going down to test the low. That's the way you look at these Chapman wave Roman candles. Hey, I'll be back straight after this. Dow's up 113, S&P's up 11. Let me just see that chart that we're looking at here. Right here. Nope, right here.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, Trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Hi folks, Basil Chapman. Don't forget, got Tom O'Brien. He's got the update coming up, and then he's got his show. Should be a great show as always. And I will be back at 11 o'clock. So meantime, back in the range, ranch. What are we looking at here? We're looking at this particular pattern. Remember what I said? Peak E in the 10-minute ESU. This is the September contract. I said that there are two patterns. One is the cup formation. One is the arch. I believe that the peak C will fail and should break. And if it breaks, watch out, because if it takes out the low of 1982.25, there's a good chance that it could go even lower. Now you've got a left side, right side price time match. And what it says is that 1140 by 1140, that's the time. When I'm doing my show, the test will be 1975.50. We'll see if that happens. There should still be a little rally attempt at 10 o'clock, and we'll see if that works or if it's going to fail. That's the way these techniques work in the Chapman wave. We've got left side, right side price match. Where did I choose the plumb line? Well, it wasn't there. It was right there. Why? Well, there are reasons for that. And those reasons are part of the techniques that we use. Now, let's go back to our story. The story is that in the context of looking at the VIX index, the volatility index right now, it is saying at 2283, it is attempting, here we are, there's the same pattern, almost the same pattern that we're looking at the E-minis, that it is broken down below the support, and that at 2282, it needs very quickly to start rallying to the 2330 area. And if it's able to do that, the market will pull back. If instead it gets stuck, then over the next 2 days, it has volatility, and that volatility could be to the downside as it breaks 22 support. So this sideways consolidation after a spectacular move to 53.29 in the 120-minute chart is using up time now after a very sharp 50% pullback. And now it's saying, hey, I'm using time, but I'm using a high-level consolidation technique, and that is really pertinent to what I'll be talking about tomorrow night in my webinar. Very important information, and wow, a better time you couldn't choose, because if this is volatility, 500 points, over 500 points from Thursday's high, smashed down to Friday. Then we have the long weekend, but overnight, Sunday night, you saw the futures were up. Then Monday, the futures were up overseas, and then Tuesday, we soared to the upside, and we go 500-600 points to the upside. That on a shorter-term basis is volatility. Folks, thank you for being here. I'm sitting in for Larry. I'll be back tomorrow to sit in for Larry while he's out. And I will also be back for my show at 11 o'clock today. Thanks for tuning in. Don't forget, go to the front page of...
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.